Forget meme stocks for a second. What if I told you the price of your morning Arabica coffee just hit $4.30 a pound? That's not a typo. For the first time ever, Arabica futures blew past that $4 mark, and it wasn't some wild speculative gamble. This is pure, unadulterated supply and demand at play, driven by everything from Brazilian drought to global climate shifts. You might be thinking, $4.30 a pound? How does that even happen? We're going to break down how a perfect storm of climate crisis, global stockpiles dwindling to their lowest levels in decades, and even past political skirmishes, yes, I'm talking about Trump's tariff threats, all converged to send Arabica prices parabolic. We'll look at the math, the real players, and what this all means for someone who just wants their daily brew without breaking the bank in 2026. Hey everyone, and welcome back to the channel. Today, we're brewing up something big, and it's not just a morning pick-me-up. We're talking about Arabica coffee futures hitting an unprecedented US $4.30 a pound. That's right, for the first time in history, Arabica has blown past the $4 mark. Now, if you're thinking, who cares about coffee futures, stick around. This isn't just about your morning latte costing a bit more. This surge is a powerful lesson in global supply chains, climate impact, and even political rhetoric. This isn't some fleeting market anomaly. We're seeing this record driven by a perfect storm. Significant supply shortages out of Brazil, global stockpiles shrinking to critical levels, and even the ripple effects of past US President Trump's tariff threats playing a role. Add to that the undeniable impact of the worsening climate crisis on major coffee-growing regions, and you've got a recipe for volatility. In fact, some analysts are projecting prices could keep climbing, potentially well into mid-2026. The lesson here isn't just about coffee, it's about understanding how interconnected our world truly is and how seemingly disparate events can converge to create massive economic shifts. So, let's dive into what's actually driving these record-high prices and what this means for someone managing their household budget or even considering investments in this volatile market. This isn't just about your morning brew, it's a deep dive into commodity markets and global economics. We just saw Arabica coffee futures hit an unprecedented US $4.30 a pound on the Intercontinental Exchange, ICE, a new high that caught many analysts off guard. To put that into stark perspective, only a few months ago, Arabica was trading around $3.10 a pound, a level it hadn't touched since March, demonstrating the rapid acceleration in pricing. And for those closely watching the daily charts, the July 2, 2026 contract briefly dipped to 301.20 US cents per pound, a move that highlights just how quickly sentiment in short-term positions can swing. Yet, despite those intraday volatilities, the broader trend is undeniable. Prices have still climbed a whopping 19% over the past month. Now, for those of you new to the intricacies of commodity trading, Arabica coffee is typically quoted in US cents per pound. A standard futures contract on the New York Stock Exchange represents a substantial 37,500 pounds, which translates to approximately 283.5 bags of 60 kilograms of exchange-certified coffee. This isn't a small speculative play from a few big funds like Bridgewater Associates, it's a massive, multi-billion-dollar market moving on fundamental factors. In 2024, for instance, a speculative surge saw coffee prices briefly jump after reports of unusual frost patterns in Brazil's Minas Gerais region, but those gains quickly evaporated when the weather normalized. This time, however, feels profoundly different, with sustained upward pressure. The lesson here is that understanding these underlying units, contract sizes, and the sheer volume traded helps paint a clearer picture of the market's true scale and liquidity, preventing misinterpretations of daily noise. So, what's really driving this historic and seemingly relentless surge? The perfect storm. Brazil, stockpiles and tariffs. March 2024. Now, this isn't just a random spike. We're witnessing a perfect storm in the commodity markets, driven by three converging factors. Severe supply shortages in Brazil, rapidly dwindling global stockpiles, and the lingering shadow of trade policy. Let's start with Brazil. As a critical global producer, what happens there reverberates across the coffee world. We've seen significant harvest challenges, directly impacting the supply. When a behemoth like Brazil struggles, that immediately tightens the global market. Think about it. Less coffee coming out of the fields means less coffee available for purchase, and basic economics tells us that drives prices up. Compounding this is the issue of dwindling global stockpiles. This isn't just speculation, we have hard numbers from the Intercontinental Exchange, or ICE. ICE certified stocks recently fell by 3,069 bags, bringing the total down to a meager 377,465 bags. To put that in perspective, that's the lowest it's been since March 2024. Imagine your pantry running low on your favorite ingredient. That's essentially what's happening on a global scale for Arabica. The lesson here is that low inventory means less buffer against any supply shocks. And then, we can't forget the geopolitical chessboard. Even before this most recent surge, the fallout from former US President Trump's tariff threats played a significant role in exacerbating market uncertainty. While not directly about coffee tariffs, the broader trade tensions created a ripple effect, making investors and traders nervous. That uncertainty, paired with real supply issues, created a powerful upward pressure on prices. These three factors, Brazil's supply woes, critically low global stock levels, and lingering trade policy jitters, have converged to create the current unprecedented market conditions. It's a complex web, but each strand pulls the price higher. And speaking of complex webs, a significant underlying force is also at play here. The climate crisis. We've seen significant harvest shortfalls. But there's a fourth, even more insidious factor at play here. The worsening climate crisis. This isn't just about localized weather events, it's a systemic disruption impacting coffee-growing regions globally. Think about it. Coffee, the world's second most valuable commodity after oil, is incredibly sensitive to climate shifts. For instance, prolonged droughts in key Asian growing regions have hammered yields, while southern Brazil has experienced unseasonably cold winters that stressed the delicate Arabica plants. These aren't isolated incidents. A February 18, 2026, analysis by Climate Central detailed how climate change exacerbated coffee harming heat from 2021 to 2025 across all 25 major coffee-producing countries, representing 97% of global production. That means almost every single coffee bean you drink has been touched by this environmental shift. KD Kelamudesi Masri from Magdala Amba University, in a mini-review article published April 22, 2025, specifically investigated global coffee price increases and their impact, particularly on Ethiopia, a crucial origin for Arabica. The research highlights how climate volatility creates immense instability in supply, making future harvests incredibly unpredictable. This unpredictability, naturally, feeds price speculation, turning what might have been a minor blip into a significant surge. Back on December 10, 2024, Maya Eaglin reported Arabica prices at $3.50 a pound, a 70% increase that year and the highest since 1977. This surge was primarily attributed to these extreme weather events. The lesson here is that climate change isn't just an abstract concept, it's a direct cost manifesting in your daily expenses. So, with these factors in play, the natural question becomes: what does this mean for the future of your coffee habit? Prolonged droughts in Brazil, notably the devastating 2021 to 2022 dry spell that withered coffee trees across Minas Gerais and Espírito Santo, followed by unseasonal frosts like the Black Frost event in July 2021, have critically devastated harvests, directly impacting global supply. These climatic shocks, reducing Brazil's output by an estimated 25 to 30% in subsequent years, are pivotal. So, with all these complex factors, what does this mean for someone considering their daily coffee habit, or perhaps, for those invested in agricultural commodities? Well, unfortunately, the forward-looking projection isn't looking much brighter. Prices are actually anticipated to continue climbing, potentially until mid-2026. If we look at the data, the May 2026 Arabica contract, according to the IMF via Fred, was recently priced at 317.53385 US cents per pound. This isn't just a prediction, it's a reflection of how the market is already pricing in these continued pressures, including dwindling global stockpiles. We've seen Arabica futures hit unprecedented highs, think US $4.41 a pound on the ICE Futures US exchange in early February 2025, and nearly repeating that in mid-September of the same year. The lesson here is that this isn't about dramatic peaks and troughs anymore, it's about a fundamental shift to consistently high prices. For the first time in decades, the C price, a critical benchmark for Arabica, has consistently remained above US $3 a pound since April 2024. Global demand, driven partly by emerging markets like China and India, coupled with the ongoing supply-side issues, simply continues to exert upward pressure. Even with daily fluctuations, the underlying trend remains strong. And let's not forget market speculation. Powerful hedge funds, observing these tight fundamentals, play a significant role, amplifying these fundamental factors of climate and demand. Beyond Arabica. Understanding the coffee price landscape. So, with Arabica futures hitting an unprecedented US $4.30 a pound, it's clear this isn't just a fleeting market tremor. But here's an important distinction. Not all coffee is created equal, and understanding the nuances between varieties helps paint a clearer picture of the overall price landscape. While Arabica, which is known for its delicate flavor and traded on the New York Exchange, has seen its price explode, there's also Robusta. Robusta, often found in espresso blends and instant coffee, is traded in London, with prices quoted in USD per metric ton for a standard 10,000 kilograms contract. The truth is, green coffee prices, whether Arabica or Robusta, are determined on the stock exchange, a complex interplay of climate, global demand, and, yes, even speculation. Think of it like this. A prolonged drought in a major growing region, say Asia, or an unseasonably cold winter in southern Brazil, like the Black Frost of 2021, can create scarcity. When you couple that with increasing demand, perhaps from emerging markets like China where coffee consumption is on the rise, prices get driven up. These mechanisms, from adverse weather to the intricate financial market dealings, reinforce how complex global supply chains and financial markets are truly intertwined. For consumers, these record high prices mean that your morning brew, which hit $7.25 a pound for ground roast coffee recently, is likely to remain elevated. For coffee farmers, like those in Ethiopia whose challenges were highlighted by K.D. Kelemu Desi Masri's research from Magdala Amba University in April 2025, it's a double-edged sword. While higher prices could mean better income, their vulnerability to climate shocks and market volatility also increases. The lesson here is that the cost of your coffee is a bellwether for wider economic and environmental shifts. So, what does this all mean for the $4.30 a pound Arabica coffee that could be in your next cup? It's a powerful reminder that our morning routine is deeply intertwined with a complex web of climate patterns, global economics, and geopolitical stability. The escalating prices aren't just a blip, they're a signal from a system under increasing stress, from the devastating Black Frost of 2021 in Brazil reducing output by 25 to 30% in subsequent years, to the delicate balance of supply chains stretched thin by unforeseen events. The lesson here is that the true cost of your coffee extends far beyond the number on the menu. It reflects the vulnerability of a global commodity to forces far beyond our immediate control. Given how much is happening in the coffee world right now, have you ever considered the journey your coffee takes from farm to mug? Share your thoughts and any experiences with changing coffee prices or varieties in the comments below. If you found this breakdown helpful, make sure to hit that subscribe button to get more data-driven insights on how global events impact your personal finances and daily life. And if you're curious about other commodities affected by climate and geopolitical shifts, check out my video on the future of chocolate. Cocoa prices explode in 2026 next. It's a similar story with some surprising twists.